Welcome to PV and Public Voice Network. Venezuela's oil comeback, the deal of the century. If I told you that one of the world's largest oil reserves, locked away for years, is slowly starting to open up? This isn't a blockbuster movie plot. It's the real story unfolding in Venezuela. Recent shifts in U.S. policy are creating a fragile opportunity to bring the country's massive oil wealth back to the global market. This is more than just oil. It's a high-stakes gamble that could reshape the world's energy supply, create a new class of winners and losers, and test the limits of geopolitical maneuvering. But the risks are just as massive as the potential reward. The backstory: a titan's fall. To get a sense of what's at stake, you have to remember what Venezuela used to be. This isn't just another oil-producing nation, it's a founding member of OPEC, sitting on proven reserves of over 300 billion barrels. That's more than Saudi Arabia. At its peak in the late 1990s, Venezuela was an energy powerhouse, pumping out over 3 million barrels of crude oil every single day. But then came the collapse. A toxic cocktail of political instability, chronic mismanagement, and crippling international sanctions brought the industry to its knees. The state-run oil company, PDVSA, was gutted as technical experts fled the country. Critical infrastructure like pipelines and refineries was left to rust. Production cratered, falling to around 800,000 to 900,000 barrels per day, a mere fraction of its former output. For years, the world's largest oil reserves were effectively off-limits, a sleeping giant in a forced coma. That is, until now. Section 1. The Fragile Opening. Explain the situation in Venezuela is incredibly fluid. Instead of a single deal, what we're seeing is a cautious, conditional easing of U.S. sanctions. The White House has granted licenses to some companies, most notably Chevron, allowing them to resume limited operations. The idea is to allow Venezuelan oil back onto the market, but under strict conditions that prevent cash from flowing directly to the government. It's a delicate balancing act. The U.S. is using access to the energy market as a bargaining chip, tying sanctions relief to political reforms and the promise of fair elections. However, these licenses can be revoked at any time, creating a climate of profound uncertainty for any company thinking of investing. There's no grand deal, but rather a tenuous diplomatic dance where the next step is always uncertain. This has left many in the industry hesitant to commit the massive capital needed, with some executives calling the country uninvestable due to the immense political and legal risks. Section 2. The bull case. A glimmer of hope. So what's the best case scenario if this fragile opening holds? The potential is enormous. Some analysts project a gradual recovery. J.P. Morgan, for instance, suggests that with a stable political transition, production could rise to between 1.3 and 1.4 million barrels per day within 2 years. A more modest view sees output hitting 1.5 million barrels per day by 2028. While not a return to its former glory, this increase would still have a significant impact. For global consumers, a steady stream of Venezuelan oil could help put a ceiling on prices and ease inflationary pressures. The clearest winners, though, would be the specialized U.S. refineries along the Gulf Coast. These facilities were specifically built to process the heavy, sour crude that Venezuela has in abundance. For years, they've been starved of their ideal feedstock, and a return of Venezuelan barrels could send their profitability soaring. Geopolitically, this strategy allows the U.S. to exert influence, potentially stabilize a key nation in its hemisphere, and counter the influence of rivals like China and Russia, who have been major lenders to Venezuela. Section 3. The bear case. A mountain of risks. For every optimistic forecast, there's a harsh dose of reality. The path to recovery is treacherous, and this entire effort could collapse. First, there's the catastrophic state of the infrastructure. Venezuela's oil industry is a rust belt. Pipelines are corroded, refineries are barely functional, and production facilities are crumbling. Just getting back to previous production levels could require tens of billions of dollars in investment. This isn't just a repair job, it's a complete reconstruction. Second are the technical and environmental challenges. Venezuelan crude is extra heavy, making it difficult and expensive to extract. Worse, the industry has the highest methane intensity in the world, with failing infrastructure causing massive leaks and gas flaring that wastes billions of cubic feet of natural gas. This makes production exceptionally harmful to the climate. The country's total external debt is staggering, estimated to be around $150 to $170 billion, creating a massive hurdle for any economic recovery.